Welcome back, everyone. We're about 6 minutes away from the opening bell at the New York Stock Exchange. We'll take you there the moment it rings. I can tell you that pre-market trading looking pretty good on the Dow and the S&P 500. The NASDAQ, which is the tech-heavy index, not looking so hot at the moment. Again, we'll take it to New York for the opening bell of the New York Stock Exchange here in short order. We'll get a better idea of what this Monday of trading looks like. First, though, let's get you over to David Brody.
Thank you, sir. All right, T-Bait, it's time now for a dose of dollars and common sense. Here now with what you need to know about keeping your hard-earned cash in your wallet is the founder of Stormwall Advisors, Michael Wilkerson. Michael, great to have you back on the show. We love having you on. Yeah, your advice is just spot on, as we like to say. I don't know who likes to say that, but we like to say it. All right. Let's start with Canada. So over the weekend, yikes, President Trump threatened to impose a 100% tariff on our northern neighbor if the Prime Minister, Mark Carney, follows through with a trade deal with China. Could you imagine China and Canada trading? All right, this is just blowing my mind. What impact could this happen, or could this have, if you will? Sorry, go ahead.
It's really hard to know where to start because it seems so preposterous. I mean, let's just remind ourselves that 85% of Canada's population lives within 100 miles a day, an hour's drive from the U.S. 70% of their trade is with the U.S. They are our neighbors, and there's absolutely no way that we are going to allow China to have a backdoor, either economically or otherwise, into our neighborhood. And the problem with this, of course, is that if we were to allow it, those EV electric vehicles and parts that are built wherever are assembled, go back and forth across the border in the U.S. We've got a trade agreement with Canada, but we cannot allow a way for those Chinese autos to come in and disrupt our auto market and the North American market in general. So it's truly absurd. Not sure where this is going other than PM Carney's virtue signaling at Davos to try to curry favor with the Chinese and try to act as an independent actor from President Trump.
Yeah, it seems to me like he's basically beyond the virtual signaling, which I totally agree with. I mean, it's one of those things like, okay, Trump, you're going to play hardball. Let me throw this out there and see if you like that. So, all right, moving on to the Federal Reserve. President Trump, Michael, expecting to announce a successor for the outgoing Fed Chair Jerome Powell in the coming weeks. What challenges do you think a new chair is going to have to face when Powell leaves in May? I'm assuming this will be kind of, I know this sounds weird to say, but kind of Trump's handpicked guy. I mean, I know they're supposed to have independence, but let's be honest, Trump has thrown independence out the window. He wants a guy that's going to lower interest rates and do a few other things.
That's right. Well, this new chairman has become like the conclave, the search for a new pope, the interest that it's drawing for the first time. Really unusual. Nonetheless, you've got really qualified candidates. You could call them a little bit more hawkish in Kevin Warsh, a little bit more middle of the road in Rick Reeders and a Wall Street bond guy. And then Kevin Hassett, who was a Trump favorite for a long time, now not looking as a likely. I don't know that whoever comes in is going to matter in the following sense. You asked what challenges does the Fed face? We've got real challenges, which is what I have referred to as the deficit debt inflation doom loop. And we are on this path of 6% deficits, growing national debt, and the likelihood that inflation resumes. The rates will come down. It is in the interest of the U.S. government, not to mention the fact that we are in the term year. That'll be good for the government. It'll be tough for consumers because we're likely to see inflation hit again. So the biggest issue that we're going to face is credibility of the Federal Reserve. One thing happened, David, recently, which is that the U.S. dollar is no longer the largest foreign reserve asset that other central banks are holding. Gold has now resumed its former place as what foreign nations are preferring to hold rather than the dollar. That's going to create challenges for the Treasury and accordingly for the Fed going forward.
We have about 20 seconds left, but you said something there. You said inflation is going to hit again. What did you mean by that, and why so? We got about, like I said, about 20.
Sure. So when you lower interest rates and you do other things called quantitative easing, pushing more money into the markets, that's going to have the effect of rising asset prices. We're already at all-time highs. We're going to see it even with gas prices coming down. Other things are going to start rising again, and that's the long-term risk that we face in the United States.
Very nice. Michael Wilkerson, thanks for being here. Thanks for answering that in 17.5 seconds. I appreciate it. You are the voice of reason. We appreciate you.
Thanks, David.